This video is to be used for educational purposes only and is not intended to replace individual research or licensed investment advice. Unique experiences and past performances do not guarantee future results. Trading stocks, options, and spot currencies involves substantial risk. There's always the potential for loss. Your trading results may vary. No representations are being made that any software or trading will guarantee profits or not result in losses from trading.
Hi, I'm Jack Lott with the FOREX report here on the James Dix Financial Network on this Friday. The dollar was well supported all week long by better than anticipated U.S. data and may end in positive territory against many currencies for the second consecutive week. The greenback finished last week on a very strong note, tried to rally at Sunday's open. Its run was cut short as Monday's European session began, and traders used the new strength to establish short dollar trades for the longer term. This led to a couple of days of dollar weakness, pushing the currency lower through Wednesday morning. It was then that the U.S. released retail sales data for November, which blew away forecasts. Of course, while the dollar rallied initially on that news, it gave back all those gains overnight. The greenback then found another breath of light early on Thursday morning on the back of Treasury Secretary Henry Paulson's comments from China. Paulson and Fed Chairman Ben Bernanke were among those in attendance at the first round of new twice-yearly talks between China and the United States. The meetings are aimed at increasing flexibility in the Chinese currency to help boost U.S. savings and narrow the trade gap with China. With only weekly jobless claims slated for the U.S. session, the dollar continued to plod higher through the day. And as Friday approached, the greenback maintained the newly found bullish tone in the broad market. European data was limited, and traders were looking forward to today's CPI and tick data. CPI came out first and unexpectedly dropped back to 2.6% in the core year-over-year reading. Furthermore, no change was seen in the consumer prices for the month versus the 0.2% increase that had been anticipated. That was a big blow to the dollar as traders quickly increased bets on a Fed rate cut early in the next year. However, it was just 30 minutes later that tick data showed more than $80 billion in net foreign purchases of U.S. securities, and the dollar came storming back. Surprisingly, the buck was able to hold on to most gains and will again end the week on a very bullish note. Well, heading into this week, after seeing the dollar strengthening through much of last week, we were undoubtedly ready to sell the currency. In the 2 weeks prior, the dollar had sold off incredibly in many pairs, creating a fresh bearish trend. Logically, we only expected a few days of dollar buoyancy before bears took it for a fresh leg lower. And having been supported by optimistic data this week, we had no such luck as the dollar traded higher. While this did present us with some very good short-term opportunities, we are confident that the greenback will continue lower ahead of the new year, now from a much better prices. European pairs have all retraced nearly 38%, which typically signifies that the prevailing trend will resume in the near future. Of course, only if sentiment has not changed. Aside from the very bearish technical look of the U.S. dollar, we believe that the fundamentals also warrant selling the currency against many other of the majors. The euro and the pound sterling remain two favorites to buy against the greenback, and the Australian dollar may be another good candidate. Next week's economic calendar is nearly as busy as this week's, and bulls will need some really strong numbers in order for the buck to continue gaining. However, we believe that if data is anywhere near disappointing, the dollar will once again find itself under pressure. And that's the latest on this FOREX report for a Friday. I'm Jack Lott here on the James Dix Financial Network.